Chris, where are we at the moment in terms of the crop at the moment and the stats, and where are we now?
Yeah, Sue, I think it's been another great year as far as production goes. If you look at, we started this marketing season, so middle of May, with about a 2.5 million tonne surplus. From then, we're expecting a 13.3. There's another crop estimate, another forecast that actually comes out today, which will give us some more information. But yeah, I think we're expecting 13.336 is where the traders expect this current crop to come through at. So yeah, certainly we've had a great season as far as rain goes. Everyone expected El Nino, and unfortunately that has filtered through to grain prices. If you had to look at the July 2010 expiry futures contract, yesterday was last trading day, so a big closeout. The July contract closing at 1,118 Rand on white maize, and yellow trading, strangely enough, still at a premium, around a 36 Rand premium, so closed at 11.54.
So what does this mean for exports? Because obviously everyone's trying to look at places where we can actually sell the maize.
Yeah, I think there's a bit of frustration out there from a trader's point of view, trying to get the product out of South Africa, the surplus, because really from a farmer's point of view, you'd like to see prices start climbing, and for that to happen, we need to get rid of the surplus. And yeah, traders just not seeing lower price levels where they can secure cheaper maize and be able to export. I think what also compounds it is great for Zambia. Zambia had a great white maize season, where they have currently about a 1.1 million tonne surplus, which is also then competing with South African maize, because traditionally we would ship our maize up there, and this year obviously with that surplus they're filtering and penetrating a lot of the markets where South Africa traditionally would have.
So what are we going to do then for 2011? What is the situation looking like for next year?
So FX, look, as a futures market, a derivative market, we have expiries out through until July 11. So it gives the market a transparent indicator of what we could expect. Using information available today, the market for next year is trading at 1,275 Rand a tonne for white maize. Yellow maize again slightly higher than that. So that gives you an indication of, okay, the market now, if all things remain the same, we'll trade around those levels. However, I think for July 11, there's a lot of information that still needs to filter through. It's, you know, a good old soccer match. You never know what's going to happen until that final whistle blows. And so if we look to the coming months, October, November are going to be crucial for us, because we need to then get a good idea of how much is actually planted to maize. Because farmers are sitting back at the moment looking at these prices and say, do I actually want to plant maize? And if I do, how much am I going to plant? Because you obviously want to manage the surplus that we've currently got.
And of course, farmers also have to deal with the hand of God scenario, like the Ghana team. But in terms of what you're hearing now, because the farmers, obviously there's a lot of rumors going around now in terms of what farmers are actually going to plant in October, November. What are you hearing at the moment?
I think, look, it's also driven by financing. You know, you need a hand of God, you need a hand out there to give you some cash to plant your next crop. And I think banks are also looking at it from a point of view as, okay, do we want as much maize produced next year? Or, you know, who knows, if we had to secure a lot of export business, we could get rid of the surplus. There are some logistic challenges that go with that, but, you know, I think farmers certainly going to be concerned about low prices, but if they do plant less, we do have some weather issues in January, February, which is your normal weather market. Yes, then you could see significant changes in current price levels for July 11.
In terms of other commodities that they could be planting, for instance, your soyas and wheat, what are the prices at the moment?
I think, look, as summer grain crops, they would typically look to soybeans or sunflower seeds. And, you know, soya over the last few days have had fantastic recovery in prices from 2,600 up to 2,900 Rand a tonne. Again, that's all current. So they need to be looking at what next year's soybean price is doing. If I had to quickly slip through here, 2,590 is for next year. And I think what we need to also do is they have another alternative on soybeans. They could use the Chicago Board of Trade instrument we've recently listed for price risk management. Whatever they're going to do, they need to look at price risk management. So look at where the market's currently pricing, have an idea in their head when it gets to a certain level, start securing a guaranteed price.
And just looking at the other commodities that have been making news at the moment, because I'm not sure how much time we've actually got left, but just looking at sugar, there were some reports out of Illovo yesterday. You mentioned that earlier that they are actually going to be hedging the price 60% above current levels.
Yeah, you know, that report that came out yesterday, I think, look, we don't trade sugar on the local market. It was great to see, you know, any business as large as that will use price risk management instruments. And yeah, I think they'd indicated that 60% of their production was secured at higher sugar price levels, which were out there early in the year. Encouraging to see, again, using the instruments out there. Although not a South African instrument, it's an international instrument. Sugar being an international product.